Thank you very much. For full disclosure, I'm very supportive of the Consumer Financial Protection Bureau. I think Mr. Cordray is doing a wonderful job. I served on the conference committee of Dodd reform, Frank reform, and I made sure that I did everything that I could to make sure that the CFPB became a part of the reforms that we were doing. For further disclosure, Ms. Wilson was asked a lot of things. She was asked whether or not she liked the CFPB, I believe. She was asked about smoking. She was asked about liquor. She was asked about a lot of stuff. Let me be clear. I think she was asked about payday loans, not the CFPB. And you weren't given a chance to answer many of the questions that were put to you because you've been interrupted by Mr. Lukemeyer, Mr. Pierce, and Mr. Nagelbacher here today. But let me just say, even though you haven't had a chance to say it, I don't like payday loans. So I want everybody to be clear about that. Let me ask you, Ms. Wilson, you said some banks and credit unions make loans at rates much less than 28%. Are these charity loans, or can short-term loans be profitable and affordable?
Well, Congresswoman Waters, thank you for asking me that question, because the reality and the experience of self-help, CRL's affiliate, is that they are profitable. And it's not charity. We are in business to make money. And our experience is that you can make short-term loans to consumers who are of low and moderate income backgrounds or in minority neighborhoods, and they can be profitable and successful. The key is to actually make sure that they have an ability to repay that loan, and that the loan is designed in a way where they can actually meet the terms. So no, they're profitable, and yes, we're in the business of making money.
Thank you. Let me ask our gentleman here today, who is representing payday loans. I think it's Mr. Sauls. There's been a lot of criticism about 400% interest, 455, I think Mr. Clay said. You've been criticized about the cost of your loans. Why do you charge 400 to 455% for your loans? Why do you do that?
Ms. Waters, it actually stems from the fact that it is necessary as a proposition to stay in business to have a larger interest rate for a short-term loan, especially if it is in conjunction with a storefront, less from the standpoint of the number of defaults, more from the underlying cost of servicing those loans.
I understand that I believe you get capital from some of the larger banks. For example, you're able to obtain capital to run your businesses and to make loans, et cetera, from some of the larger banks. Is that right?
I think that would be much a minority point of view. I mean, I do not think that is.
You have not received capital from Chase Bank?
I do not believe that Chase Bank is supplying lines of credit to anyone in our industry.
What is the cost of your capital, the money that you get from wherever you get it from?
I'm sorry, I missed the question.
The capital that you use to make loans with, to run your business with, I don't know where you get it from, but what does it cost you?
It would vary from institution to institution. Some is through private placements, some is through partnerships and so forth. So I could not give you a complete answer to that. What I could tell you is that our return on capital is less than banks' return, large banks' return.
Thank you. Let me just say something about the automobile industry here. There are a lot of people who are watching what is happening in the industry, and we find that we're afraid that what happened in the housing market with subprime lending is now what's happening with automobile lending. And we're worried about that. We see people, and I know people, and I have constituents even, who are walking into these automobile places. They're getting cars without their credit being vetted. They're paying, 40% interest on the loans that they're getting. What's going on, and why is this happening? What is his name? Mr. Friedman? I'm speaking to you, I'm sorry.
The time, gentlewoman, is expired.
Would you allow Mr. Friedman to answer the question?
Briefly.
Mr. Nagelberger?
Well, ma'am, as far as the rates that you're talking about, I wonder if you are referring to buy here, pay here dealers, which is not the industry that I represent. We represent indirect auto lenders, captive finance companies, independent finance companies, and banks that offer credit that is transacted by dealers to purchasers of new and used automobiles.
I'm talking about the industries you represent, yeah.
I hate to do this, but we're going to have to vote here in a little bit, and I'd like to get as many members, and so I'm going to have to, if you want to get one of your staff members to reach out to them to answer that question